Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi taala wabarakatuh, and hi to everyone, especially to our beloved lecturer for the subject Financial Accounting and Reporting 2, Dr. Aslina binti Muhammad, to my teammates and to our fellow friends. So before we started our presentation, so let me introduce my teammate first. So this group 1, we have me, Muhammad ARIFFIN bin FAUZI. Next slide.
Sorry.
Also we have SURENRAJ, anak lelaki SUBRAMANIAM. Then we have ARCHANA, anak perempuan SAMBATH, and NURWAFA AFIQAH binti ZAMROS. So, as everyone knows, we are given an assignment about companies' compliance and disclosure. Therefore, we need to choose 2 companies that are listed in Bursa Malaysia. So, we decided to choose 7-Eleven Malaysia Holding Berhad and AN Company Malaysia Berhad to evaluate their company's compliance. So before we go deep into our presentation, let me tell you guys about the background of the company we have chosen. First company that I would to introduce is 7-Eleven Malaysia Holding Berhad. So 7-Eleven was founded by J.C. Thompson in 1927 as Southland Ice Company in Texas. So, first 7-Eleven store in Malaysia was opened on 9 October 1984 in Jalan Bukit Bintang, Kuala Lumpur. But now we can see 7-Eleven store, so many 7-Eleven store in entire Malaysia. 7-Eleven supplies convenience products such as magazine, food product, and daily essentials. They also do other services such as prepaid phone cards, online bill payment, ATM machine, and e-wallet reloads. So next company that I will introduce is AN Company Malaysia Berhad. So AN Company Malaysia Berhad was found on 15 September 1984. AN Company is major network of general merchandise stores and supermarkets. They sell all type of product. AN Company Malaysia Berhad also specialize in convenience retail activities, the construction and management of shopping malls, credit card companies, and services. Next, I would pass to my friend.
Okay, my name is SURENRAJ, and now I'm going to give introduction on our selected standard, which is MFRS 116, Property, Plant and Equipment. Okay. MFRS 116 Property, Plant and Equipment was issued by the Malaysian Accounting Standards Board, MASB, in November 2011, and it is defined as tangible asset held for use in the manufacture or supply of goods or services, for rent to others, for administrative purposes, and intended to be used more than one period. So the standard objective of our, the main issues that our standard need to be addressed are acknowledgement of the asset, which is the recognition of the asset once we acquire it, and then the determination of its carrying amount, and the changes in depreciation of impairment losses to be recognized related to them. Okay. The cost of PPE of an item shall be recognized as an asset only if future economic benefits associated with the items likely to flow into the entity. This is because only then we can reliably measure the cost of the item. Other than that, a PPE that qualifies for recognition as an asset shall be measured at its cost at recognition. The next one is the carrying amount of a PPE item shall be de-recognized on disposal or when there's no expected future economic benefits from its use or disposal. Okay, next is I'm going to explain about the disclosure requirements in MFRS 116, Property, Plant and Equipment. Okay, there are 5 financial disclosure requirements that need to be addressed in the financial statement. The first one is financial statement shall disclose the measurement basis used for determining the gross carrying amount of an PPE. The next one is the useful life or the depreciation rates used to calculate intercalculation of the asset. The third one is the gross carrying amount and the accumulated depreciation of the asset. The fourth one is the depreciation method used, which is whether the entity choose to use straight line method or the reducing balance method. And the fifth one is the reconciliation of carrying amount and at the beginning and at the end of the period. Okay, that's it. Next.
Okay. My name is ARCHANA Sambath. My metric number is 203544. And now on evaluation and comments on disposal of 7-Eleven Malaysia Holdings Berhad annual report. The three main disclosures that were stated are: firstly, property, plant and equipment are measured at cost. This is acceptable according to MFRS 116.73D. As the financial statements report property, plant and equipment at the beginning and at the end of the year, they use the gross carrying total and the accumulated depreciation and aggregated with any accumulated impairment loss. Second, they use straight line method to calculate the depreciation. This is acceptable according to MFRS 116.73 B and C. They use straight line method to calculate the depreciation to allocate their cost or revalued amounts to their residual values over their estimated useful life. Finally, property, plant and equipment is de-recognized upon disposal. When there's no future economic benefits are expected from its use or its disposal, an item will be de-recognized. And now on the evaluation and comments on disposal of Aeon's annual report. And the three are: firstly, straight line method to calculate the depreciation. Depreciation is recognized in the profit or loss on a straight line basis over their estimated useful life. Second, disclose the residual value in a proper way. The gain or loss on disposal is determined by comparing the proceeds from its disposals with the carrying amount and is recognized net within other operating income and operating expenses, respectively in profit or loss. And finally, the assets classified as held for sale is disclosed in a proper way. The assets are remeasured and then measured at the lower of their carrying amount, and less disposal costs are measured with fair value.
Next, my name is NURWAFA AFIQAH ZAMROS. My metric number is 204270, and I will present about the comparison on both companies. So firstly, 7-Eleven Malaysia Holdings Berhad had used straight line method to calculate its depreciation. 7-Eleven had charged 59,164,000 ringgit as depreciation of property, plant and equipment, and added to adjustments under operating activities. This method was also used by Aeon Company Berhad, which Aeon had used straight line method to calculate depreciation with a charge of 297,807,000 ringgit as depreciation of property, plant and equipment, and it was added to adjustments under operating activities. Next, 7-Eleven Malaysia Holdings Berhad had measured its PPE at its cost. 7-Eleven had disclosed property, plant and equipment using gross carrying amount and the accumulated depreciation. This method was also used by Aeon Company Berhad, where it measured its PPE at its cost, disclosed property, plant and equipment using gross carrying amount and the accumulated depreciation. Next, 7-Eleven Malaysia Holdings Berhad had also disclosed the recognition of PPE upon disposal. 7-Eleven had disposal of the asset will then determine the residual value that the company expects to obtain. This was also used by Aeon, where the recognition of PPE upon disposal was also used. Disposal of the asset will then determine the residual value that the company expects to obtain. However, Aeon Company Berhad had an addition disclosure, which was assets held for sale. Assets are remeasured at the lower of their carrying amount and the fair value less cost of disposal. Next is conclusion. For conclusion, we were able to learn and to review and evaluate an entity's annual report specifically on disclosure. We were also able to identify the accounting policies of the entity and which are almost same in accordance with MFRS requirements. And lastly, we were able to gain more knowledge towards disclosure and how the entities disclose their accounts in reality. So I think that's all for our presentation. So thank you.